What if I told you that some of the wealthiest Americans legally earn thousands, even millions of dollars, without paying a single dollar in taxes on that income? It sounds like a loophole reserved for insiders, but the truth is, the US tax code, yes, the IRS rulebook itself, is quietly built to reward people who understand how to use it. The difference between those who pay the most taxes and those who pay the least often comes down to strategy, not income. And today, you're about to see exactly how that game is played. At the center of these strategies is something deceptively simple: tax-free gross. Most people focus on how much they earn, but wealthy investors focus on how much they keep. Take the Roth IRA, for example. Unlike traditional retirement accounts like a 401k, where you defer taxes today and pay later, a Roth IRA flips the script. You pay taxes upfront on your contributions, but from that point forward, your money grows completely tax-free. That means when you withdraw in retirement, every dollar of capital gains, dividends, and interest is yours to keep, untouched by the IRS. Over decades, this can turn into a massive advantage, especially if you're consistently investing in high-growth assets. Then there's one of the most underrated tools in the entire tax system, the Health Savings Account, or HSA. On the surface, it looks like just another medical expense account, but in reality, it's a triple tax advantage vehicle. Your contributions are tax deductible, your investments grow tax-free, and withdrawals for qualified medical expenses are also tax-free. Wealthy individuals often treat the HSA like a stealth retirement account. Instead of spending it on current medical bills, they pay out of pocket, let the HSA investments compound over time, and then reimburse themselves years later, completely tax-free. It's a strategy that quietly builds a second pool of untaxed wealth in the background. Beyond these well-known accounts, high earners often go even further by layering strategies. Backdoor Roth conversions allow individuals who exceed income limits to still access Roth benefits. Mega backdoor contributions through certain 401k plans can dramatically increase the amount of money moved into tax-free territory. And then there are taxable brokerage strategies that use long-term capital gains rates, tax loss harvesting, and step-up in basis rules to minimize or even eliminate taxes across generations. The system rewards patience, planning, and consistency, not just high income. The key takeaway here is that tax-free income isn't about secret tricks. It's about understanding how to use the tools that already exist. The wealthy don't necessarily play a different game. They just know the rules better. And once you start thinking in terms of tax efficiency instead of just income, everything changes. Your investment choices become smarter, your long-term growth accelerates, and you keep more of what you earn. Because at the end of the day, it's not about how much money you make. It's about how much of it you're able to keep.